Paying zero in federal income tax. It sounds like a dream, doesn't it? A far-fetched fantasy reserved for only the wealthiest individuals. But the reality is far more accessible than you might think. Isn't just for the ultra-wealthy. It's not an exclusive club with velvet ropes and secret handshakes, or those exploiting loopholes. It's not about shady dealings or bending the rules to your advantage. The U.S. tax code is designed as a system of incentives, a carefully constructed framework intended to encourage specific economic activities, rewarding behaviors like creating jobs, fostering economic growth and providing opportunities for others, investing in housing, stimulating the real estate market and providing homes for families, and saving for retirement, ensuring financial security for the future and reducing the burden on Social Security. When someone pays no income tax legally, it's not a sign of tax evasion or clever trickery. It's because they're doing exactly what the government wants. They are actively participating in the economy in ways that benefit both themselves and the nation as a whole. Think of tax law as a roadmap, not a punishment, a guide to navigate the financial landscape. Follow the right path, and you're rewarded. The tax code isn't designed to penalize you, but to incentivize you. Start a business, deduct your expenses. The government wants to encourage entrepreneurship, so they offer tax breaks to help small businesses thrive. Invest in retirement, get a tax break. Saving for your future is a responsible decision, and the government rewards that foresight. The goal isn't to avoid taxes, that's a short-sighted and potentially illegal strategy, but to align your finances with government priorities, to understand what the government wants to encourage and structure your financial life accordingly. This proactive approach transforms you from a passive observer to an active participant in the economic landscape, from a passive taxpayer into an active participant. You're no longer just paying your dues, you're shaping your financial future. Our journey is about tax education, not evasion. We're here to empower you with the knowledge you need to make informed financial decisions. We'll explore legal, ethical strategies, the kind that will keep you on the right side of the law while maximizing your financial well-being. To reduce your tax bill, potentially to zero. Imagine the possibilities, reinvesting those savings, securing your future, and achieving your financial goals. The tax code is complex, a labyrinth of rules and regulations that can seem daunting at first glance. But its principles are clear. Once you understand the underlying logic, the complexity begins to fade away. Incentives drive the economy. They are the engine that fuels growth and prosperity. By steering your finances accordingly, by aligning your actions with these incentives, you can unlock significant tax benefits. You're not exploiting loopholes, you're following the rules. You're playing the game according to the established guidelines. Paying zero is a reward, a testament to your financial acumen and strategic planning. For smart, government-approved financial planning. It's a win-win situation. You benefit financially, and the economy benefits from your actions. When it comes to minimizing your tax liability, deductions are your first and most fundamental tool. They represent opportunities to reduce the amount of your income that is subject to tax. Think of them as strategic offsets against your earnings. It's crucial to understand that a deduction lowers your taxable income, not your tax bill directly. The impact of a deduction depends on your tax bracket. For example, if you earn £100,000 and have £20,000 in deductions, representing legitimate business expenses or other qualifying items, you're only taxed on £80,000. This can result in significant tax savings, depending on your tax rate. The higher your tax bracket, the more valuable each deduction becomes. This is because the deduction shelters a portion of your income that would have been taxed at a higher rate. Most people, especially those with simpler tax situations, use the standard deduction, a fixed amount the government sets based on your filing status. But to drive your tax bill towards zero, itemizing deductions is key. This involves a more detailed approach to identifying and claiming all eligible deductions. Itemizing means listing out all your deductible expenses, rather than taking the standard deduction. Like mortgage interest, which can be a substantial deduction for homeowners, state taxes, including income or property taxes you've paid, medical expenses exceeding a certain percentage of your adjusted gross income, and charitable donations to qualified organizations. If your itemized deductions exceed the standard deduction, you'll save more on your taxes by itemizing. To maximize your deductions, track every qualifying expense meticulously. Business use of your car, including mileage and related expenses, charitable goods donations, ensuring you have proper documentation, and more. The list of potential deductions is extensive and can be tailored to your specific circumstances. Many people miss out on valuable tax savings simply by not keeping accurate records of their expenses, or knowing what expenses are actually deductible under current tax laws. Remember, every pound you deduct is a pound the government can't tax, effectively increasing your disposable income. Mastering deductions is the foundation of a zero-tax strategy, allowing you to significantly reduce your tax burden. It's about diligent tracking of your expenses throughout the year and understanding what qualifies as a legitimate deduction according to the current tax guidelines. When it comes to minimizing your tax burden, understanding the difference between deductions and credits is absolutely key. If deductions lower your taxable income, they essentially reduce the amount of your income that's subject to tax. Tax credits, on the other hand, offer a more direct and powerful form of tax relief. They directly reduce your tax bill, providing a one-to-one reduction of the amount you owe, pound for pound. This means that every pound of tax credit directly offsets a pound of tax liability. To illustrate, a 1,000 pounds deduction in a 25% bracket saves you 250 pounds because it reduces your taxable income by 1,000 pounds, and you pay 25% less tax on that amount. But a 1,000 pounds credit cuts your tax bill by the full 1,000 pounds. It's a direct reduction, offering a more significant impact on your overall tax liability. Credits are targeted rewards for actions the government wants. They are incentives designed to encourage specific behaviors and support certain demographics, like adopting a child, which can be a significant financial undertaking, and the government offers credits to help offset those costs. Or making your home energy efficient by installing solar panels or upgrading insulation, contributing to a greener environment, or paying for higher education, investing in your future and the future of the workforce. These are all areas where the government provides tax credits to ease the financial burden. There are two types. Understanding the distinction is crucial for effective tax planning. Non-refundable credits reduce your bill to zero, but you won't receive any of the credit back as a refund if the credit amount exceeds your tax liability, and refundable credits can result in a refund even if you don't owe any taxes. This is where the real power of credits comes into play. The most powerful credits, like the Earned Income Tax Credit, designed to support low to moderate income workers and families, can wipe out your tax bill and even get you money back. It's a significant benefit for those who qualify. The strategy, a smart approach to tax planning, involves leveraging both deductions and credits to your advantage. First, use deductions to lower your taxable income, reducing the overall amount subject to taxation. Then stack credits to eliminate what's left, further reducing your tax liability and potentially even receiving a refund. For many families, credits like the child tax credit and education credits, which are specifically designed to support families with children and those pursuing higher education, can erase their federal tax bill. This can free up significant financial resources for other essential needs. Knowing which credits you qualify for is essential. Take the time to research and understand the eligibility requirements for various credits. Stack them smartly, and you can reach zero taxes. It's about maximizing your benefits and minimizing your tax burden through strategic planning. Credits are the secret weapon in your tax reduction arsenal. Use them wisely, and you can significantly reduce your tax liability and potentially even receive a refund. Starting a small business, even part-time, opens up a world of deductions unavailable to employees. As a business owner, ordinary and necessary expenses become tax-deductible part of your phone, internet, home office, and car expenses. These aren't new costs, they're existing expenses now working for you. You don't need a storefront or staff. Freelancers, gig workers, and online sellers all qualify. The key is a genuine profit motive, not just a hobby. The IRS rewards business owners because small businesses drive the economy. By starting a business, you align with government goals and unlock major tax benefits. Deducting business expenses can dramatically lower your taxable income. For anyone serious about zero taxes, a small business is almost essential. It's the most effective way to turn everyday spending into tax savings. Saving for retirement is a government-endorsed way to cut your tax bill. Accounts like 401(k)s and IRAs let you deduct contributions from your taxable income. Contribute £20,000 to your 401(k), and your taxable income drops by that amount. This saves you thousands in taxes now while building your future nest egg. The money grows tax-deferred, so you pay no tax on gains until withdrawal. This compounding effect accelerates your wealth. Business owners can contribute even more through SEP IRAs or solo 401 CPAs. Prioritizing retirement savings is a win-win: less tax today, more wealth tomorrow. The tax code is designed to reward this responsible planning. Use retirement accounts to slash your tax bill and secure your future. Real estate investing is a tax-favored strategy. Rental property owners can deduct mortgage interest, property taxes, insurance, repairs, and more. The biggest benefit: depreciation, a non-cash deduction that can offset real profits. Depreciation often wipes out taxable rental income, even if you're making money. Sometimes these paper losses can offset other income, especially for active participants. Real estate professionals can deduct unlimited losses. Your primary home also offers perks: mortgage interest deduction and a huge capital gains exclusion when you sell. By buying, living in, and selling or renting properties strategically, you build wealth and minimize taxes. Real estate is uniquely tax-advantaged. It's a cornerstone of a zero-tax strategy. Families can unlock major tax savings through credits for dependents. The child tax credit alone can eliminate a family's federal tax bill. Child and dependent care credits help offset childcare costs. Education credits make college more affordable and cut your taxes. Dependents aren't just children. Elderly parents or disabled relatives may qualify. Claiming all eligible dependents maximizes your credits and deductions. Lowering your income through deductions can help you qualify for more credits. Combining family credits with other strategies is key to zero taxes. For families, these credits are central, not just a bonus. Plan your finances to capture every available benefit. The best tax plan is useless without solid records. You must prove every deduction and credit. Receipts, logs, and statements are essential. Use separate accounts for business, track expenses with apps, and keep digital copies of receipts. For vehicle deductions, log every business trip with dates and mileage. Charitable donations need written acknowledgments. Property donations need itemized receipts. Medical deductions require detailed bills and proof of payment. Good records protect you in an audit and help you spot new tax-saving opportunities. Think of record-keeping as building your financial defense. Organized records empower better tax planning. This habit separates those who hope for savings from those who achieve them. Be the CEO of your financial life. Track everything. The U.S. tax code is complex, and ever-changing professional guidance is invaluable. A tax advisor isn't just a form filler, they're your strategist. They stay updated on laws and help you structure your finances for maximum savings. Don't just see a tax preparer at tax time. Work with them year-round for proactive planning. Advisors can project your income, suggest timely moves, and help you hit tax targets. Their expertise often saves you far more than their fees. They spot strategies and connections you might miss, like business structure or real estate rules. A good advisor brings peace of mind and ensures your plan is both aggressive and compliant. The journey to zero taxes is collaborative. Your learning and record-keeping, their expertise. Hiring a tax advisor is an investment in your financial future. With the right team and strategy, paying zero in federal income tax is achievable.